quick, as we bring Kelly up and get her audio rolling in video, I want to let Kelly know that we appreciate her and Medico sponsoring our call this week. We appreciate the fact that Medico's become a big partner with us in the last 11 months, 10 months. I don't even know if we've had 10 months of awareness since Medico came on the scene. I know Megan Wood was a big part of one of the first people to jump in, and Kelly has been very hands-on, helping Megan learn the product and close deals, and helping other agents learn the product and close deals. She's gotten Ivy Wilson to learn the products and helping out as well. And so it's just really been cool to have a carrier that's got what's for us a secondary sale become as big a part of our business as it has. And I understood someone was telling me, I think Ivy was telling me Friday, Kelly, that you guys have had some really tremendous growth in volume from the Alliance because of what people are now doing. And I want to give Megan credit for pioneering that. But Kelly, thank you for being here. We're glad you're here. And I'm going to kind of turn it over to you.
Okay. I just want to make sure you can hear me. Can you hear me?
Loud and clear.
Awesome. Well, first of all, I was scanning through all of the faces, and I just absolutely adore. I started looking at all the people that I know, and I was waving, and I didn't even have my camera on. So, hi, Junior. Hi, Marcus. Hi, guys. It's so nice to see everybody. I'm so excited to be with you, and I'm so excited to sponsor this. Mike was talking, and he was talking about 11 months. It's only been 8, actually. We're getting ready to come up on our 9th, 11 on the contract. But you know what? Until Megan Wood was kind of like her own self-study, really no one knew who we were through the Alliance. The only way the guys knew who we were was really through Great Western. So it has just been an honor to grow this grassroots with all of you. And I appreciate the fact that you all have just connected to Medico the way that you have, and you really, you're just kind of like, you're my growth engine right now with Medico. So today we're going to talk about 2 different things, one today and then one on Thursday. But today we're going to focus solely on our hospital indemnity, which is, like Mike said, this is really a secondary product to what you're doing. I don't expect you guys to be dialing specifically for this. I just want you guys to understand if you don't already sell hospital indemnity, or if you do and you're still fairly new at it, that you can understand how this can really solidify your premiums of the life insurance as you're walking into the homes. So first and foremost, there are 5 different base elements. And before I jump into them, I'm going to take one more step back, simply because I get so excited about this product that I just kind of want to let you know that when I say that this is really going to help you solidify your life insurance products inside of a household, just remember that the #1 debt that people face is actually medical debt, which means that if your clients go to the hospital for any reason whatsoever and they come out and they can't pay their bill, this particular product will help cover some of those financial gaps so they can still make their house payments, their car payments, their electric bill, they can still buy their food, and they can still keep their life insurance premiums in place. Because unfortunately, when it comes to insurance premiums, people really look at those as secondary costs. They don't look at them as primary costs, although we all know, being in the insurance industry, that they should be considered a primary cost within the home, because it's going to help out everyone, right? If someone passes away, it helps out the family that's remaining. If someone goes to the hospital, it can really help out cover not only the hospital bills, but also any other bills that the family might need to really help pick up. And one of the things that Megan Wood has been so pivotal with when she's talking to people about our hospital indemnity is when she's talking to the primary wage earner in the family, she really talks to them about what it would be like if they went to the hospital and weren't able to provide at that time for the family. How would that financial shift happen within the family? Well, this is how the financial shift could actually happen. Medico's hospital indemnity plan is there to help that financial shift not feel so spongy, if you will. We don't want people to drown in medical debt. So there's 5 base elements to our hospital indemnity plan, and the 5 things that you see here on the screen right now are those 5 elements. So no matter where you live, what plan you can offer, this is what the base plan will cover. This is not a rider. None of these things are riders. I just want to make that completely clear because this is what's going to drive and customize the base plan for your clients. And when someone like Chris was talking about, hey, you know, I don't have any money, I can't buy anything. Well, dude, what happens if you go to the hospital? You're going to owe a lot of money. Well, this is a way to solidify that you're not going to owe a lot of money, right, Chris? So this is going to be a great product for you to be talking to your clients about too. So the hospital confinement benefit, which is that very first line, is what really drives the base plan's premium. And the reason why is it's customizable to the plan. So if your client goes to the hospital, they get to choose prior to going, right, as they're applying for the hospital indemnity, they get to choose what type of dollar amount they would like to receive from Medico if they go to the hospital per day and how many days they would like to be covered. So the first thing that I want to make it clear that that the premium is based on is going to be that dollar amount per day. So they can choose $100 a day per day up to $600 a day, and they can choose it within $25 increments, which means that they can really dial it in to be very specific on what the deficit is based on their bill. When I talk about deficit and bill, there's there's what's called the max out of pocket for a Medicare Advantage enrollee. And for some of you, you're going to go right off the page right now because you're like, I'm not AHIP certified. I'm not going to be in the senior market. That doesn't matter. There's still going to be a cost that's going to be involved if someone goes to the hospital, and how much do they want to help cover that cost once they get out in their discharge. So the Medicare Advantage actually has a maximum out of pocket that a Med Advantage enrollee has to cover. And typically that's anywhere between $250 to $350 per day that they're going to pay out of their pocket no matter what until they get their benefits to kick in, and that's usually on their 6th day. So if that's the case, they're coming out of pocket at least $1,500 to $1,800 just from basically walking into the hospital. It's a lot of money, right? That's a lot of money. So what we're here to do is help cover those 5 days that are coming out of their pocket. We're going to cover it down to that first day, depending on the dollars that you helped your client choose, either up to day 6, 7, 8, 9, 10, 21, or 31. And those are the days that they can be confined in the hospital. But if they get discharged prior to that max day limit, we're going to continue to restore that benefit back to them as long as they stay out of the hospital 60 continuous days or longer. So let's say, for instance, Mike leaves the office today and he falls down in the parking lot and breaks his hip. Sorry, Mike, but you just broke a hip. So let's say he breaks a hip and Noel rushes him to the hospital and he has to go in there for some surgery, and he's going to stay a couple days and let that heal so that he can go home and sit in the recliner and be spoon-fed, right? We're going to do that? Yeah, there we go. Okay. He laughs and she's like, don't do that to me, Kelly. Okay. So he goes into the hospital for those 3 days, and when he gets discharged, he's only used, let's say, 3 out of his 6 days. That's okay, because as long as Mike stays out of the hospital 60 continuous days or longer, we're going to restore all 6 days back to him, plus the dollars that he had filed on claim. And that's going to go on for a lifetime. So if Mike lives to 135 years old and he goes to the hospital 80 more times between now and whenever he passes away, we're going to continue to pay that hospital benefit as long as he holds on to the policy and continues to keep his premiums current. So the max number of days, the reason why we have a max number of days is so that it fits in with different types of programs that people may have. So again, I talked about those Medicare Advantage enrollees. They typically don't have a benefit that starts until the 6th day. Well, some of the ACA benefits don't start until that 10th day. So you can kind of understand how you can play in those days, okay? Someone's going to be a little bit older. You may want to have more days that are involved just because there may be some extra monies that need to come into the household just to help them during the recovery time. So the second part of the hospital indemnity plan is the observation unit. That observation unit states that we'll pay 100% of the inpatient benefit dollar amount, so whatever the dollars are that you helped your client choose in that first piece, up to 6 calendar days per year if someone gets admitted into the hospital under the code of observation. Why would somebody go under the code of observation? Well, there's two reasons. One, it may not necessarily be a life-threatening situation or as severe as to get someone confined, but they may need to spend the night or a few hours in the hospital just so the doctors can keep an eye on them. I'll give you a couple examples. My next door neighbor, she had gone to the hospital a couple of years ago because she had a blood clot. She didn't realize it was a blood clot at the time when she went in, but the doctors had to take her off of her estrogen and put her on a blood thinner, and they wanted to make sure she wasn't going to have any adverse reactions to that blood thinner, but they did keep her overnight. So she wasn't confined in the hospital. She was just being observed, making sure that everything was going to be fine based on coming off of the estrogen and going on to the blood thinner. But she did have to spend some time in the hospital. She was coded under observation for that. Not severe enough to be confined, but not necessarily as easy to just go home and make sure everything is fine. And as you can also see there, there's no minimum or maximum hours required for the stay. We do have a carrier competitor in the marketplace that you all know of, GTL. They actually will pay a percentage based on hours within that observation unit. We don't have that same thing. If they're in observation for 2 hours or up to 6 days, we're going to pay that as a per day benefit. Now, the emergency room benefit is $150 a day for 4 calendar days per year if someone gets admitted into the hospital within 24 hours of injury or accident. Now, the emergency room benefit will only pay if they get confined into the hospital. However, if they go into emergency room, go through the observation process, and still get confined within 24 hours, it will also pay. So the ER must go into a confinement within 24 hours. The inpatient mental health benefit is $175 a day if someone's admitted into a hospital due to mental illness or a nervous disorder, and we'll pay that for up to 7 calendar days per year. I'm going to tell you that this is going to be a massive benefit here very shortly. With all of the seniors that have seen family members and friends suffer from COVID, or they've been put into isolation for so long at this point, mental health is going to be a massive buzz in the senior community, mark my words. We have seen just here in Indiana, I was talking to a lady that runs, she's the head of a psychology department, the psychiatric wards for IU Health here in Indianapolis. And she said they have seen an astronomical number of people that have tried to check themselves in due to alcoholism. And most of those are over the age of 60 because they've been confined. And they're lonely and they're bored. And I guess what better to do besides just drink? I don't know. I could think of other things, but that right now is a big deal. So it used to be teenagers. I think we're going to see a huge switch in the senior market. And the last part of our base plan is that travel and lodging benefit. It's $100 a day for up to 10 calendar days per year for expenses that are incurred if someone needs to travel more than 50 miles to receive care in a general hospital or a specialty facility. So think about people that might have gone to the hospital due to oncology or to receive chemotherapy treatment, to receive radiation, someone that may have gone to a hospital more than 50 miles away if they've had a heart condition, cardiac issues. Maybe it's just somebody that lives 50 miles from their closest hospital. I tell the story sometimes. Ivy gets really mad at me because I tell it over and over again, but I cannot stress it enough. I was driving through the hills of Virginia, and I know between Richmond and Roanoke, there's pretty much nothing. And I noticed all of these homes that were sitting in the mountains because there's no leaves on the trees at that time. I'm like, wow, I'm in the middle of nowhere. They were driving more than 50 miles to their closest hospital, I guarantee it. So all 5 elements that you see on the screen right now are all part of the base plan. The base plan is going to run anywhere between $8 to about $15, depending on the levels that you choose. Remember that hospital confinement benefit is what really drives that base plan premium. But that's really going to set forth and be able to pay if your clients go to the hospital, really to help solidify any bills or any financial obligations that they may have due to that hospital stay. Now, with any great base plan comes riders, right? And there's going to be some states that are going to exclude some of the riders that I have. So some of you may be in Texas. Texas only has 3 out of our 7 riders, but I'm going to cover all 7 of them. Of course, I always encourage you to use My Enroller because it's going to be the best tool for you to know what is available in your area and what is not. So the ambulance service benefit rider is, of course, the #1 rider that we see added to the majority of the policies, and it states that we're going to pay $250 for up to 4 rides per year. Yes, I did change the word days to rides, and the reason why I did that is there has been some situations where there has been an ambulance that has come to pick up the patient, drop them off at a hospital. That hospital was not able to help them, so they put them back in an ambulance and transferred them to another hospital. That would be considered 2 rides in that calendar year. And of course, lifetime max up to $2,500. Now, the outpatient therapy and chiropractic benefit rider states that we'll pay $50 a day for 15 or 30 days of outpatient therapy per year, which includes occupational, speech, and physical. It must be a medical practitioner recommended. I like to use the example of my dad. My dad is a former wrestling coach, has a lot of arthritis in his back, and because of that arthritis, every year on his annual exam or annual physical from his general practitioner, he writes him a prescription to be able to go to physical therapy 1 day a week. That kind of gets him stretched out, gets him ready for his golf game. So he gets that prescription. He gets to go see his physical therapist. I just say he likes to go see her because she's a hot blonde. But that's neither here nor there. Like I said, my dad, he's a little houndy now that he's 72. He gets away with a lot more. That therapy also has the chiropractic services on it. So we do give you a kind of a buy one, get one on this rider, and it includes 5 days of chiropractic services. Now, the outpatient surgery benefit rider, as you can see, will pay 4 different dollar amounts depending on what your client chooses, up to 2 calendar days per year. This is a great rider for those over 50, and here's the reason why. Most people over 50 have been recommended to go in and have a colonoscopy, right? There's some people on the training today aren't going to raise their hand, but they're kind of going, yeah, that's about the case. So at 50, that's typically the recommendation. Well, colonoscopy is considered surgery, even if they don't remove polyps. And the reason why is because they actually are getting put to sleep. So that's considered a surgery, even though some surgeries don't require anesthesia, such as going to sleep, the colonoscopy does. Well, that's considered 1 day per year. Now, over 50, if they go in for their colonoscopy, if there's no polyps that are removed, they're going to be required to go back every 3 to 5 years. If there are polyps removed, they're going to end up being recommended going back every year. So this surgery benefit rider would actually pay them every year. The other thing in the senior community that we see is cataract removal. Cataract removal, if they're doing the right eye, they're doing the left eye. So that would pay for their cataract removal. Sun damage or skin cancer, this is the rider that would pay for having skin cancer removed. Now, the skilled nursing facility benefit rider is actually our fastest growing rider because seniors are seeing a need to go into a rehabilitation center after a hospital stay. That's typically where they are directed afterwards. So our rider will pay either $100, $150, or $200 a day for days 1 through 50 if they get recommended to go into a skilled nursing facility. It also has a restoration as long as the policyholder stays out of skilled nursing or off of the skilled nursing situation. More than 180 days will restore that rider back to them one time. This is this rider, to me, I think it's a necessary, especially in the senior community. Most people aren't going to go home after they go to the hospital. I had mentioned outpatient surgery earlier. There's a lot of people that are getting their knees replaced, and it's going to be on an outpatient basis. They go outpatient and then can go into a skilled nursing facility. People that have heart attacks or strokes or get diagnosed with certain types of cancer or after a surgery situation typically get put into a skilled nursing facility to get that rehabilitation that they are needing. So I believe that this rider is going to pay. If your policyholder takes it, I believe it's going to pay later on in their life. Now, the lump sum cancer benefit rider, we're actually going to talk about cancer on Thursday. We're going to talk about our standalone, which I believe is a necessary offering as well when it comes to the statistic of cancer. But the lump sum cancer benefit rider will pay, depending on the level that your client chooses, pays anywhere between $1,000 up to $10,000 lump sum tax-free. The lump sum cancer benefit rider is great for those that have had a history of cancer or have had cancer in their family, because there's only a 2-year look back. And when I say cancer in their family, if they've seen someone go through a cancer diagnosis, they're going to want this rider. There's not too many people that have ever seen someone, a loved one, go through a cancer diagnosis and are not scared, because they do know the statistic. So the urgent care benefit rider pays $50 a day for up to 4 calendar days per year if someone visits the urgent care instead of going to the emergency room or to the hospital. Typically, someone that goes to the urgent care, they go because it's a non-life-threatening situation. Could just be an allergic reaction. It could be, hey, I need a stitch. It could be like me, I go for my sinus infections. It's easier for me to get into there than it is to get into my doctor. So it's for those that might need medical attention, but not necessarily need to seek that out at a hospital. And then the lump sum hospital confinement benefit rider pays $250, $500, or $750 for additional days of confinement or additional confinement times. This pays up and above the base benefit, so it's just extra money in their pocket based on times of confinement.
Hey, Kelly.
So I did see a couple, yeah. Mm-hmm.
Yeah, I was gonna make sure you saw Gabriella's question that was up there. Did you see that under the chat?
Yep. So if a client files a claim for 1 day of observation, this will make them ineligible to file another claim if they were admitted a week later to the hospital for, no, that does not make them, nothing makes them ineligible. If a client files a claim for 1 day of observation, there's no limit to the observation outside of 6 calendar days per year. So let's say, for instance, Gabriella, your client goes into observation, gets out of observation 24 hours later, goes back into the hospital a week later, that actually starts the hospital confinement. So if they go to the hospital, stay in there 1 day, they get out, and a week later they go back, that would start their day 2 up to however max days they have. So once the max number of days or 60 days of discharge from discharge date, that's what would start their lifetime. Are the premiums tax deductible? They are not, no. And unfortunately, you can't use an HSA to pay for these premiums either. So the only premiums that I know of that are tax deductible at this time are long-term care premiums. And that's based on a graduated schedule. But of course, anytime you have tax deductible premiums, you would need to counsel your client to seek out an accountant or a CPA. Any chance that you'll be in New Jersey soon? I know, Jan, that you're not really talking about me personally. I would love to come to New Jersey. I love the Green Garden State. It's beautiful there. I have family that lives there, but we won't have any product in New Jersey anytime soon, unfortunately. Sorry. I would love to. You know what? You should become non-resident licensed in some states. Let's look at those states here in just a second. Any other questions that I may be skipping over? Everybody's got some great stuff in here, by the way.
I think we got them all. Keep going.
All right. So then we are a simplified underwriting company. Simplified just simply means that we allow you, the agents, to do the field underwriting for us. This is not guaranteed issue. We are looking for people that are maybe a little on the healthier side, and we're also looking for people that are not what we call dual SNP. And dual SNP means if they're Medicaid and Medicare eligible, they can't be Medicaid eligible. They can be Medicare eligible, but they can't be Medicaid. The reason why is because if our policy pays out, we'll actually throw them out of their classification. So there are 9 health questions. Some of those questions, just to kind of give you an idea, they're really nothing new than what you guys are already working with on the life insurance side, but diagnosed with COPD, MS, Parkinson's, Alzheimer's, using oxygen, diabetics that are insulin dependent, cancer, heart, stroke question within the last 2 years. Are you pregnant? Are you seeking fertility treatment? Any surgeries that have been recommended and not performed in the last 2 years? Any medical tests for malignancy that have been recommended and not performed in the last 2 years? HIV, AIDS, AIDS-related complex, pretty much everything that you guys are already familiar with. The difference between our contestability period and the 6-month pre-existing condition is simply this. The 6-month pre-existing condition limitation is for those people that have a condition that is not a knockout. So let's say asthma, for instance. We would not cover an asthma attack for a hospital stay due to an asthma attack in the first 6 months. After 6 months, totally fine, free and clear, no problems. The contestability period, however, states that if your policyholder files a claim for anything in the first 2 years, we're going to pull all medical records 2 years prior to the application date to verify that all of the health questions were answered appropriately, which means all of the no's were truly no's. Now, I used to be in the life insurance field, and I've sat down knees to knees with people, and I said, hey, do you use nicotine? And I had a lady literally light a cigarette, took one puff of it, drug it out, and said no. So we all know that clients don't necessarily tell us the information truthfully and honestly, or maybe sometimes they just don't know. In that situation, she kind of knew, right? So we want to make sure that we are actually underwriting the people that truly want and need this type of policy. Everybody wants it, but we want to make sure that we're getting it for those that are going to hold on to it for longevity. Much like life insurance, we want it in place for a long period of time, not for a short period of time before claims are filed. This is the same type of program. Remember, your life insurance is going to pay the beneficiary. This is actually going to pay the policyholder.
Hey, Kelly.
Now, earlier I had, yep.
This is Junior. You're doing great. Thank you. You're doing amazing.
Oh, hey.
Hey, I have a question. So you guys said you don't do underwriting when you're applying because we're doing field underwriting. So let's say we apply and then the client makes a not a death claim, but makes a claim 6 months later. Like, how far back I'll look to see and verify what was on the original application? Is it always, even if it's a claim 6 years later, or is there a time frame?
It would be for the first 2 years. So for the first 24 months that the policy is in force, we would pull a claim or pull medical records for that claim. So let's say, for instance, Junior, you had someone that went to the hospital because they got into a car accident, and they filed a claim for their hospital stay due to that car accident. And we would pull their medical records from 2 years prior to the application if the claim was filed within the first 24 months of in-force. After 24 months, all bets are off. They can claim, they would claim for that car accident. We would not be pulling medical records at that point.
Okay, gotcha. That helps. It's like life insurance.
Yes, yep. And then Dion asked, does this plan cover pregnancy, hospital stays? The only pregnancy that this would cover would be pregnancy due, complications due to pregnancy, not for termination of pregnancy, but the pregnancy would have had to have happened after the policy was in force. And it would be only complications of. And Dion, if you have more specific questions around that, we can go through the exclusions, or if anybody does, we can go through the exclusions. The reason why is this product is only available for application between the ages of 40 and 85. Now, typically, people, women, in the ages of 40 and over are not actively trying to become pregnant. Not saying that they're not or haven't, just saying not usually going to be the case, usually past that child-bearing years. The majority of our plans that are in force are for those over the age of 60. So if they're getting pregnant, by all means, they should be playing the lottery. So, you know, this is the case. Okay, so Junior, I still see you there. Did you have, nope, no more questions? You're good, got it, okay. So what you see here on the screen is just simply a potential payout and premium chart. This is actually for a 65-year-old female in the state of Iowa with a household discount, because our plan does have that 7% household discount, which I will explain on the next screen. But that very first line with the inpatient hospital stay that you see, where it says 6 days of benefit for $250 a day for $13.43 in premium, that's the base plan. And remember, the base plan has 5 different elements: the confinement, the observation, the emergency room, the transportation and lodging, and the mental health. So really very affordable for a client to own, especially based on how much a hospital stay actually can cost. And then everything below that is the riders that we offer. So what I've done, outside of the lump sum hospital confinement, which is the one that just gives the extra money, I've pushed every rider in. So you can kind of get an idea. Our riders are pretty inexpensive. Ambulance, less than $3 a month to be covered for the ambulance. That's skilled nursing, which is our fastest growing rider, less than $8 a month. The outpatient surgery, $6.60. Everything is pretty inexpensive. The best thing for you to understand is run a sample quote, talk to the client about the hospital indemnity plan and the riders that come with it, and just say, hey, look, you know, we can get you covered for your hospital stays, your observation, blah, blah, blah. Here's the base plan. And here's just kind of an idea of what the riders are going to cost, because for $48 a month, not that expensive. It's really not, to make sure that they're going to be covered for thousands of dollars based on a hospital stay. And I will tell you this, it's not a matter of if your clients are going to go to the hospital, it's a matter of when and how many times, because it's going to happen. And over their lifetime, because remember, this is a lifetime restoration on that base plan, over a lifetime, they may go 20 times if they hold on to it for 20 years. So it's an active policy for your policy holders to be financially protected based around a hospital stay. Now, if I can get my screen to flip. So I had mentioned that the household discount is 7%. Over to the left-hand side of the screen, you're going to see the definition of our household discount, because it's very different than our other carriers. It's very liberal. It just states that the policyholder must live in the home with someone else over the age of 18, and they will qualify for the 7% household discount. That's 7% household discount on a dog, a cat, or a cockatoo that person is living with. We actually needed that.
She's taking everything she can get from the Alliance. She's using MailPro a little bit now. She's using Bang Bang social media. She gets referrals, and she goes back and sees existing clients. And so the Medico product is a huge part of her checklist of, did I do this? Did I get them final expense? Check. Do they need Medicare Advantage or Medicare Supplement? Check. Do they need Medico to help cover what Medicare Advantage or their Medicare Supplement doesn't cover? Check. And so she makes sure she gets that taken care of. And it's just with every client, she's building the report, and she's doing that when she goes back to visit. And she's telling the story of, oh my gosh, hey, you've got Humana Gold. Well, it looks like, how much is your gap if you're hospitalized? Well, it's exactly a number, $250 or $300. I said, oh my gosh, do you have cash to handle that? Well, no. I said, you're going to like this. Oh my gosh, look, it's only $26 a month if we add this other rider in. So learning to tell the story and think about solving the client's problem as you're building the relationship is really huge. So I kind of jumped in. I'm surprised Junior Marcus didn't speak up. As they were there, I know the Junior is speaking up earlier, unless he got distracted. But
hey,
Kelly, we'll keep going. Oh, there we go, Junior. How much bonus money do you want to share? How much bonus money you got from Medico so far?
Would love to if I knew the answer to that.
Okay, you don't know.
I've got some. I don't know. I've sold like 9 or 10 of them. I mean, something like that.
Okay, all righty.
Got some.
Cool. All right, well, good job. Kelly, let me turn this back over to you as we're wrapping this up.
So I guess the bottom line is really think about where you can maximize, because like Mike was just saying, Megan works in a very kind of a condensed area, and I live probably about 45 minutes from where Megan lives. And I'm going to tell you what, she is making a splash in the area that she's in. She doesn't have a huge market. Her market, her county the county radius that she's in is really very rural, and she's touching everybody. They all know who she is. People over in Indianapolis are now hearing who she is, because now I'm noticed, right? I've noticed, not just from her being on my leaderboard, but people are asking about who she is and if they can work with her. So I want you to just think about that, how more rounded of an agent you can become if you offer this financial stability product on top of what you're already doing. Something else I wanted to bring up, I actually wrote this down. I'm a firm believer in self-education, and not necessarily just about product. And Mike was talking earlier about don't let yourself come off of your dials. You need to set your bar high. Napoleon Hill wrote a book that his family did not actually publish until after he had died. And it came out, I think, within the last 5 to 7 years, and it's on Audible. I suggest all of you have an opportunity to listen to it because the guy's voice is freaking fabulous. It's called Outwitting the Devil. And one of the principles in that book is all about drifting. And it's if we don't hold ourselves accountable to that bar and we start to drift, like if we don't make our 40 dials today and we only do 39, and if we continue to do 39, how easy it is then to do 38, and then how easy it is to go down to 37. It's all about drifting. And then of course one of these days we're going to go, how come we weren't making as much money as we were whenever we were working at that bar? So I want you to all to really consider not drifting. Don't let off the gas at all. If you can keep it steady, it's going to pay off. I'm telling you, it's going to pay off. I just hope that Medico can be part of that inside of your product offering. And if you guys have any questions for me, of course, my cell number is right there on the screen. Write it down. My email is right there on the screen. Write it down. You can always text me, call me, whatever you need. Whatever you need. I'm here for you guys. And that's all I have.
All right, got one more question. Go ahead, Hayden.
Hey, I just wanted to let you finish, but for the lump sum cancer payment, you know, for whatever amount it is, I know that on some of the life apps, they overlook some cancer, like basal cell skin cancer or squamous. I think I pronounced that right. Would they pay out for that, or would those not get paid out? More of like a more serious diagnosis of cancer.
That's a great question, Hayden. So it's based on diagnosis for an internal cancer or malignant melanoma. So internal cancer or malignant melanoma. What would pay out for a skin cancer based on skin cancer removal would actually be the outpatient surgery. So my husband had a basal cell carcinoma removed off of his face a couple years ago, and that would have paid, the outpatient surgery would have paid for that cancer removal to take place, but the lump sum cancer is specifically for that internal cancer, malignant melanoma. And I think Dion also asked the question around chiropractic. Yes, that outpatient therapy has that chiropractic benefit. It's based around manipulations of the neck and spine. We all know what chiropractic is, and we would cover 5 visits to the chiropractor on a calendar year.
There we go. Cool. Well, Kelly, again, hey, thank you for being here. That is an awesome book that you mentioned, Outwitting the Devil, and that whole concept of drifting. That's such a massive thing. So if people haven't read it and you're looking for something else to read, not during your dial time,
right?
But to read like between the hours of 9 p.m. and 8 a.m., that's something you've got there. So awesome. Okay. All right, guys, rock and roll. Thank you again, Kelly. And for those that are here dialing, get you your 20 appointments book. Get into Kelly's pocketbook. Make her spend that money. That's what she's here for,
right,
to help out. Right? All right, guys. Thank y'all. And learn to use Medico on your appointments on Tuesday and Wednesday so we can share some stories with Kelly on Thursday. Awesome. Thank you, guys. Back to work.